back to our channel where you can find helpful and up-to-date information regarding doing business and working in Vietnam. Today we are going to talk about a topic that is one of the concerning of foreigners who are working in Vietnam at the moment. That is how to calculate the personal income tax on employment income while working in Vietnam. Okay, so let's get started. Pursuant to the tax regulation regarding present personal income tax in 2021, foreign workers in Vietnam are divided into two cases. First case are residents are those individuals meeting one of the following criteria. First, residing in Vietnam for 183 days or more in a tax year, or having a permanent residence in Vietnam, including a registered residence which is recorded on a permanent or temporary resident card, or rented house in Vietnam with a lease term of 183 days or more in a year, and unable to prove the tax resident in another country. So, in this case, employment income is taxed on a progressive tax rate basis from 5% to 35%. The progressive tax rates are specified as following. From 0 to 60 million VND per year, the tax rate will be applied at 5%, and the next 60 to 120 million VND will be taxed at 10%. So I can say like with each level of the income, there will be a respective tax rate up to 35%. And in order to make it easier for you to understand, for example, in a taxable year for a foreign worker has the taxable income is 2.3 billion VND, equivalent to 100,000 USD per year, then the personal income tax will be like this. So the first 60 million VND will be taxed at 5%, and the next 60 million VND will be taxed at 10%, and the next 96 million VND will be taxed at 15%, and the next 168 million VND will be taxed at 20%, and the next 240 million will be taxed at 25%, and the next 336 million VND will be taxed at 30%, and finally the rest 1,340 million will be taxed as 35%. So in total, there will be an average rate at 29.8% on the taxable income of 2.3 billion VND. And the next point when we are calculating the personal income tax, that is, taxable employment income includes all cash remuneration and various benefits in kind and is calculated by total income minus 18 following items. The first, payments for business trips. Second, payments for telephone charge and stationery cost. Third, office clothes, subject to a cap if the office clothes are provided in cash. Fourth, overtime premium. For example, additional payment above the normal wage, not the full amount of the overtime night shifts payments. Fifth, one-off allowance for relocation. Sixth, transportation to and from work. 7. Once per year home leave round-trip airfares for expatriates. 8. School fees up to high school in Vietnam for children of expatriates. 9. Training. 10. Mid-shift meals subject to a cap if the meals are provided in cash. 11. Certain benefits in kind provided on a collective basis. For example, membership fees, in entertainment or healthcare. 12. Airfares for employees working on a rotation basis in a number of industries, for example, petroleum or mining. 13. Employers' contribution to certain local and overseas non-mandatory insurance schemes without payout of accumulated premiums to the employees, for example, medical insurance or accident insurance. 14. Allowance benefits for wedding, funeral, subject to a cap. 15. Employee contribution to mandatory social, health, and unemployment insurance schemes. 16. Contributions to local voluntary pension scheme subject to a cap. 17. Employee contribution to certain approved charities. And finally, 18. Tax allowance. The personal allowance is at 11 million VND per month and dependent allowance as 4.4 million VND per month per dependent. And the dependent allowance is not automatically granted, but the taxpayer needs to register the qualifying dependents and provide the supporting documents to the tax authority. Okay, so let's move to the second case. Are individuals not meeting the condition for being tax resident are considered as a tax non-resident, and the tax non-residents are subject to a personal income tax at a flat rate of 20% on their Vietnam-related employment incomes. However, this will need to be considered in light of provision of any DTA that might apply. So that's all for the questions how foreigner workers can calculate their personal income tax in Vietnam. And if you don't know how to apply 18 deductible items above to reduce your tax amount, or if you have employment income in Vietnam and other countries at the same time but don't know how to calculate your personal income tax, please feel free to contact us to receive a free consultation to figure it out. And in the next video, we are going to talk about corporate income tax of foreign corporates in Vietnam. So let's subscribe our channel to be updated. Thank you and see you next time.